These are some of the best places to park your cash. With the US inflation rate reaching its 40-year high of 7.5%, it's very important now to protect our money against inflation. After all, a high inflation rate means our buying power decreases over time. So $100 today buys you less goods than it did 1 year ago. So in this video, I'll be talking about some of the best places to park your cash to earn some sweet interest. And in some cases, you can even beat inflation. So without further ado, let's start the video. Before I begin though, I want to make a few disclaimers. First, I'll only be focusing on products that are easily accessible to the general public. So things like checking and high-yield savings accounts at big national banks are included. However, I won't be discussing things like credit unions because those tend to be more regional and have membership requirements. They do generally offer higher yields though, so they're definitely worth considering. Second, we'll be talking about non-volatile assets. So things like stocks, Bitcoin, and Ethereum are off the table because their values can fluctuate in the short term. Instead, I'll be highlighting 5 places where the $100 you deposit should effectively be worth $100 plus a little bit of interest by the time you want to withdraw your money. And third, none of this is financial advice. And that's because personal finance is, well, personal. Some of us might need cash regularly and therefore prioritize liquidity. Others might be comfortable locking their money up in bonds or CDs to take advantage of higher yields. So while this video will be helpful in learning all of these different products, you should still do your own research to see what fits your personal situation and your own goals the best. Let's first start off with the most liquid place to park your cash: checking accounts. These are designed for everyday spending, and they keep your money easily accessible. The biggest perk is that you can deposit and withdraw your money at any time. Now, most checking accounts at brick and mortar banks don't offer any interest. However, some come with great sign-up offers. For example, Chase offers a $225 sign-up bonus when you open a Chase Total checking account and set up direct deposit within the first 3 months. They do have a monthly service fee of $12, but you can easily waive it with monthly electronic deposits or by meeting the minimum balance requirements. So if you have a job and want a great physical bank, Chase is a good option with its big sign-up offer. However, if you are someone who rarely uses physical cash, an online bank may be a better fit for you. These tend to offer higher yields. For example, Capital One currently offers 0.1% interest on your money and no minimum balance requirements. Another great option is Ally Bank, which offers up to 0.25% interest on your money as well with no minimums. Next up are savings accounts, which tend to offer higher yields. These accounts are still highly liquid, but many only allow up to 6 withdrawals per month before fees kick in. Generally speaking, these are great places to put a 3 to 6 month emergency fund because they're easily accessible and still produce a small return. Now, many savers love to shop around for banks that offer the highest interest rates. Some of my favorites include Capital One, which offers 0.4% interest, and Ally Bank, which offers a little bit more at 0.5%. Both have no minimums and no maintenance fees, which is a big plus. If you want to have a little bit more fun though, you can try out Yada as well. This company offers prize-linked savings accounts, where for every $25 you deposit, you'll earn 1 ticket to participate in their weekly sweepstakes. Each day at 9 p.m. Eastern Time, Yada will randomly select a ball, and if you get certain matches on your tickets, you can earn prizes ranging from 10 cents to as much as $10 million. It's incredibly fun, and best of all, your money is still FDIC insured. And even if you're absolutely unlucky and don't get any prizes whatsoever, you'll still earn 0.2% interest on all of your savings. It's my favorite savings account to recommend, and it's where I personally earned 2.3% interest over the last year on my emergency fund. Coming in the number 3 spot is certificates of deposits, also known as CDs. This is where you agree to hold your money in your account for a specified period of time, ranging from months to several years. In return, the bank generally offers you an even higher fixed interest rate for that entire period of time. Please note though that these are less liquid than savings accounts because your money is essentially locked up for that specified duration. And if you want to end your CD early because you perhaps found a better rate somewhere else or need the money to pay bills, you may end up paying a small fee to do so. Therefore, no penalty CDs are becoming increasingly popular because you can withdraw your money without paying that fee and then deposit your money elsewhere for a better return. And this is great in periods of rising interest rates, which is something we might see today. Now, because you're locking up your money for a fixed return for a longer period of time, you absolutely want to do research to see which banks offer the best interest rates. Some of the highest right now include Marcus by Goldman Sachs at 0.65% for the next 12 months and Synchrony Bank at 0.9% for 15 months. Personally, I'd still stick with no penalty CDs like Ally Bank at just 0.5% because I do think that interest rates will rise in the near future, but that's just me. The fourth place is one of my favorites, and that is Series I savings bonds, aka I-bonds. The first three accounts I talked about earlier are FDIC insured, but this one is a bond to the US Treasury. So it's generally regarded as an equally safe place to park your cash that's also fully backed by the US government. In a nutshell, these are government-issued bonds that pay a guaranteed interest rate that is automatically adjusted to keep up with inflation. For example, because inflation right now is so high in the United States, I-bonds are currently paying 7.12% interest until the end of April. And that is ridiculously high because these bonds are essentially as safe as a regular savings accounts. And if inflation goes even higher, these I-bonds will be paying even more interest. And best of all, the interest you earn is exempt from state and local taxes. And in some cases, they can even be exempt from federal taxes as well. However, there are some important limitations. The first is that you must keep the bond for 1 year, so you're unable to withdraw the money you lent out to the government for the first 12 months. Additionally, if you cash out the bond in the first 5 years, you'll lose the previous 3 months worth of interest. Therefore, it's really important to have a 3 to 6 month emergency fund in place before you start thinking about I-bonds. But if you've done that already, I-bonds are a great place to earn high rates that keep up with inflation. They're so good, in fact, that the US government limits you to only purchasing $10,000 worth of I-bonds each year. Truth be told, I just barely scratched the surface when it comes to how amazing these bonds are. So for a deeper dive into I-bonds, feel free to check out my dedicated video here on this channel, linked in the top right-hand corner. And finally, we have stablecoins, which can offer even higher returns. At its core, a stablecoin is a digital asset that is pegged to the US dollar in a one-to-one basis. In other words, the stablecoin should always be worth $1 in value on average. Now, there's many stablecoins out on the market right now. These include centralized ones like USDT and USDC that are managed by companies like Tether, Coinbase, and Circle. There are also decentralized versions as well, like UST, that runs on the Terra blockchain. Personally, I prefer USDC the most because it's run by US companies Coinbase and Circle. I like their transparency with their cash reserves, and USDC in particular is regularly audited by third-party accounting firms to see if each coin is really backed by $1. It's also the second largest stablecoin ecosystem by market cap. So I personally believe that USDC is one of the safest stablecoins in today's market, but that's just my opinion. Once you've selected your stablecoin of choice, you can earn a high interest rate by lending out your crypto. There's many lending platforms to choose from, but 3 of my personal favorites include Gemini, Celsius, and Crypto.com. I would have included BlockFi, but they recently had some conversations with the SEC, and their interest accounts aren't available to new customers in the United States. But For Gemini, Celsius, and Crypto.com, you can earn between 8 to 14% interest on stablecoins like USDC. It's absurdly high, and way more than you would get with a traditional savings account at just 0.5%. However, if something seems too good to be true, you should be suspicious about it. And that's because there are many risks associated with stablecoins. For example, they are not FDIC insured or government regulated. They might lose their peg on the US dollar and suddenly be worth a lot less than $1. And if each stablecoin is not fully backed by cash reserves and everyone wants to remove their money at the same time, you could run into liquidity problems. Additionally, if you lend your stablecoins, you also have to deal with counterparty risks. By using a lending platform like Celsius, you are entrusting them with your assets. Now, personally, I chose Gemini, Celsius, and Crypto.com because they have a great reputation, but the risks are still there. If they get hacked, go bankrupt, or decide to flee with all your money, you could lose all your crypto. So there are definitely a lot of risks when it comes to stablecoins and lending platforms. However, even if you choose DeFi protocols like Anchor on the Terra blockchain, you're still entrusting a smart contract to protect your assets. And there's many stories online of decentralized apps getting hacked. So if you do decide to hold some cash in stablecoins, you should do a lot of research on which stablecoin to hold and what the best lending platform is for you and your risk tolerance. Now, personally, I use 4 out of these 5 places to earn a return on my money. I use Chase as a checking account, and I love that $225 sign-up offer. I use Yada to hold my 4-month emergency fund, earning over 2% interest per year, with that tiny slim chance of potentially winning a Tesla or even $10 million. I purchased iBonds last year when they first announced 7.12% guaranteed interest. And if inflation remains high for the next several months, I'll likely purchase some more to earn even more passive income. Finally, instead of having CDs, I personally prefer stablecoins like USDC. The platform that I use is Crypto.com, where I can earn 12% interest on USDC for 3-month staking durations. So with all that said, thank you so much for watching, and if any of these accounts interest you, feel free to use the referral links down below to get even better sign-up offers. As always, if you enjoy this type of content, feel free to leave a like and subscribe for more, and I'll see you in the next one. Stay safe, stay healthy, and stay awesome. Take care.